Assalamualaikum and hello everyone. Firstly, I want to introduce myself. I'm Nusha Jaina Aini binti Zainal Abidin, and now I want to explain about topic 7, regulatory compliance and financial institution. Now I want to explain about definition, regulatory compliance and financial institution. In general, compliance means conforming to a rule such as a specification, policy, standard, or law. Then, regulatory compliance describes the goal that organization aspire to achieve in their effort to ensure that they are aware of and take steps to comply with relevant law, policy, and regulation. Due to the increasing number of regulation and need for operational transparency, organizations are increasingly adopting to use of consolidated and harmonious set of compliance control. This approach is used to ensure that all necessary governance requirements can be met without the unnecessary duplication of effort and activity from research. Therefore, financial institutions, otherwise known as banking institutions, are corporations that provide service as intermediaries of financial market. Broadly speaking, there are three major types of financial institutions. There is depository institution, contractual institution, and investment institution. Depository institution means deposit-taking institution that accept and manage deposit and make loan, including banks, building society, credit union, trust company, and mortgage loan company. Next, contractual institution is insurance company and pension funds. And lastly, investment institution is investment banks, underwriter, and other different type of financial entities managing investment.
Hi, my name is Iman Raina. I would like to explain about goals and objectives. Regulatory compliance describes the goals that organizations aspire to achieve in their effort to ensure that they are aware of and take steps to comply with relevant law, policies, and regulations. Second is to perform quality control of each designated function of the operation level. This responsibility is to ensure that the financial institution comply with the obligation under the law. The first objective is the overriding objective of a compliance officer should be to ensure that an organization has system of the internal control that effectively measure and manage the risks that it faces. Second, the objective of financial regulation are usually market confidence. To maintain confidence in the financial system, financial stability, contributing to the protection and enhancement of stability of the financial system. That's all. Thank you.
My name is Nurin Batrisha binti Muhammad Razif. I will explain about elements of regulatory compliance at financial institutions. First, a compliance program should establish a formal written compliance program that is often administered by a chief compliance officer. This program will generally include policies and procedure, training, monitoring or audit, and consumer complaints response. The first component of compliance management system is for a financial institution to establish formal policies and procedures that are designed to mitigate the risk of violations of compliance rules and regulations. The rules and regulations are maintained and modified to remain current and complete and to serve as a reference for employees in their day-to-day activities. The second element of a compliance program is training. The board of directors must ensure that each employee has appropriate training in order to effectively complete their duties in a compliance manner. This means that all employees should receive some level of compliance training, including the board of directors. The next element of a compliance program is monitoring or audit. While each of these functions vary slightly in implementation, they both have one main objective: to self-identify and correct compliance deficiencies. Monitoring is typically a more frequent activity than the audit, and is often less formal. On the other hand, the audit function is typically more formal than the monitoring function, and is completed on a less frequent basis, such as once a year. As is the case with a larger compliance management system, the monitoring or audit function must be based on the size and complexity of the organization. The final component of a compliance program is a financial institution response to consumer complaints. Each bank or credit union must ensure that it is appropriately responding to and handling complaints and inquiries. It is important that each financial institution make an intentional good faith effort to resolve each consumer complaint.
Hello to everyone. My name is Adeline N. Baybayan. Today I will discuss about why is regulatory compliance and financial institution is important. Okay, first, what is compliance means? Compliance means is conforming to rules such as spec, pattern of law. Regulatory compliance outlines the goal that organizations. Regulatory compliance is crucial point for business. The regulatory also the principle to maintain the proper function of economies, hence societies. Okay, why regulatory compliance is important? Because of for consumers to them from the harmful consequence of action carried or out by firms, and for business to protect their brand and reputations, and for director and manager to avoid criminal liability and career termination. Why financial institution is important? Financial institution is provide consumer and commercial is also play a pivotal role in every economy. A role of financial institutions such as holding cash deposit, the provision of credit facilities, offering investment advice, holding cash deposit. Financial institutions have enhanced the safety and security of people, organizations, and their monies. The institutions have easy cash withdrawal permissions, and this allows the individual and the organization to access the cash reserve when they need them. The provision of credit facilities to do access such a facilities to provide that you can pay the advance back, and the institution will offer you as such cash and you such as cash when you need. Loan have helped launch multi-million-dollar business, and this speak to the power of credit facilities. Offering investment advice. Investment is one of the best way of ensuring financial future for both individual and business, but without the right information, people and business may lose all this cash by picking up bankable investment options.
Assalamualaikum and hi, my name is Narafika binti Norshad, and today I'll talk about the key areas of regulatory compliance that financial institutions must have in place in order to comply with the regulations within anti-money laundering and financial crime. The first point that I want to talk about the key areas of regulatory compliance is systems and controls. We will go into the details of all of different areas that are in scope for the regulatory compliance, but just to start with this important that there will be policies and procedures across all these different areas that financial institutions must maintain updated and easy to access by all the staff. So this is the first point to include in the systems and controls, having strong policies and procedures in place across all the areas of financial crimes. Within systems and controls, financial institutions must be able to demonstrate that they have efficient systems in order to detect their potential risks, and they must assess those systems and monitor them regularly to make sure that they are fit for purpose. Out of all those system management, information must be created and produced in order to escalate to senior management the potential risks faced in money laundering and financial crime. So it is important that the quality of the data that is extracted out of those systems and reported to risk committees are accurate and are able to demonstrate when there are risks to be identified for the financial institution. One more point within system and controls is the risk assessment that must be produced to highlight how financial institutions can adopt a risk-based approach and how they prioritize on the financial crime areas to be focused on. Next, I'll talk about fraud, which is mainly divided into two areas. The systems is to identify potential fraud risks and protect the customers and to stop transactions for fraud reason, and then the internal fraud protection. This is where the financial institution will maintain under control their staff to make sure that there are no potential fraud activities being completed by their own staff. Moreover, sanctions and asset freeze. Within this space, financial institutions must ensure that they are not doing business or they are not facilitating the transfer of funds with entities, individuals, or countries that are included in the economic sanction list. So a system must be in place in order to monitor those type of activities for customer name screening as well as transactions screening. When there is identification of a true match with any of those entities, then there is the obligation for the financial institution to complete the reporting to the relevant jurisdiction in order to comply with economic sanctions requirements. Next is money laundering and terrorist financing. In order to comply with this specific point, there will be a number of actions that a financial institution will need to do. Number one is the risk assessment, where they are required to complete a review of their geographic footprint, for example, the system they are using and their overall risk for exposure to financial crime. This will be a key requirement based on the regulation to make sure they have a risk assessment that is updated and in line with the risk of the organization. Within money laundering and terrorist financing, we also have the monitoring of customer activities, which will allow the identification of potential money laundering transactions completed by customers and will ensure that the financial institutions will onboard only those customers that are in line with the risk appetite of the organization. So it is important that a customer due diligence process is in place. When there is a potential suspicious activity report or they identified unusual activities, a report is submitted to the local crime agency for suspicious activities. The data security is another very important point. This is where a financial institution is ensuring that there are systems in place to protect their infrastructure and the organization is able to deter possible intrusion from cybercrime activities. So when there is a threat coming from a cybercrime exposure, they must have systems in place to detect those activities and must have processes in place to mitigate cyber attacks. Last but not least, bribery and corruption. It is extremely important that financial institutions monitor against the bribery and corruption to maintain this crime under control. For example, when staff is hired, this is maintained under monitoring to make sure that there are no specific connections with people within the organization that are not declared. This is to maintain a very transparent process and reduce the potential favoritism that can be done because of bribery and corruption. Financial institution staff will also need to report any gift and entertainment. Usually, those must be pre-approved when they are dealing with customers. So when there is an exchange between staff and a customer, all those must be declared and generally pre-approved. Within bribery and corruption, it is also important that there is a clear reporting line when there are bribery and corruption to be reported. So the staff must be trained to comply with the financial institution regulations against bribery and corruption. So those were the main elements I wanted to highlight regarding regulatory compliance.
And now I want to explain about conclusion from topic 7. Okay. This chapter discusses the impact of the regulatory failures move pre and post financial crisis and describe the consequence for companies today. The chapter describes the other perspective on the regulatory failures investigated and how the Dodd-Frank Act sought to deal with these failures. The chapter concludes with the discussion of how there has been some improvement in the coordination between federal agencies, but explain that much of the overlapping jurisdiction remains intact.
Hi, my name is Norafina binti Ahmad Sani, so I'm going to explain the summary. So, in general, compliance means conforming to a rule such as specifications, policy, standard or law. Regulatory compliance describe the goal that organizations aspire to achieve in their effort to ensure that they are aware of and take steps to comply with relevant law, policies and regulations. Due to the increasing number of regulation and need for operational transparency, organizations are approach is used to ensure that all necessary government requirements can be met without the unnecessary duplication of effort and activity from resources. Okay, next we go to regulation and accrediting organizations is very among fields, which is with examples such as PCIDSS and GLBA in the financial industry, FISMA for US federal agency, HACCP for the food and beverage industry, and the Joint Commission and HIPAA in healthcare. In some cases of other compliance frameworks such as COBIT, which is COBIT, or even standard NIST, which is NIST, inform on how to comply with regulations. Okay, however, some organizations keep compliance data, which is all the belonging data or pertaining to the enterprise or included in the law, which can be used for the purpose of implementing or validating of complaints in a separate store for meeting reporting requirements. Compliance software is increasingly being implemented to help companies manage their complaints and more efficiently. And this store may include calculations, data transfer, and audit trails. And last, regulatory compliance varies not only by industry but often by locations. The financial research and pharmaceutical regulatory structure in one country, for example, may be similar but with particularly different nuances in another country. The similarities and difference are often a product of reactions to the changing objective and requirements in different country, industry and policy contexts. So that's all of my explanation about the summary. So thank you.